Hello everyone, and thanks for tuning into the Financial Investor channel. Let's see if it's working. A little bit here and there. I don't know. I wasn't planning on going live today, but I was going to be writing up stocks with X dividends next week. So, there's Lydia. Hey Lydia, how are ya? I haven't done a live event in a really long time, and I was kind of going through, about to begin writing up my stocks going X dividends next week. So I figured I'd probably do like a little bit of a live session. I got the kiddo out in the living room, and then wifey currently out there as well. So, in this video, we're going to be going through the live, kind of getting everything set up. Good in traffic. Oh, you're stuck in traffic? But, are you able to hear me? Stock talk. Yeah, I'm going to be picking up some stocks going ex dividend next week. And so I'm going through my process right now of how I select stocks to discuss and my stocks going ex dividend next week. So kind of going to be going through how I pick up those stocks. Usually there's a bunch of stocks going ex dividend next week. And I don't know if everybody kind of looks at dividend.com for their dividend information, but it's one of my go-to places to pick up information on stocks. I have a bunch of other areas on my website that websites I use to find stock information. But for the most part, we're going to go through this video, and all we're going to be doing here is picking up stocks that have ex dividends coming up next week, and then of those stocks, how many of those stocks are actually worthy of investing in, how long they've, we're going to look at rising revenue, net income, free cash flow, and that's what we're going to be screening a majority of them for first, knocking those out, and then stocks that have future PE ratios expecting to drop, meaning that their earnings are expected to increase, and then the ones that aren't going to be decreasing their PE ratios in the future, meaning their earnings are going to be dropping. We're going to be cutting those from our list, and then we're going to be taking a look at, of those lists, the stocks there that have been paying out dividends for more than 5 years or longer, and then kind of shrinking the list until we get about 5 stocks that we can actually discuss and talk about whether they're worthy of investing in, going into the next dividend next week. And we have a lot of stocks going earnings tomorrow. I know Facebook is supposed to be doing earnings tomorrow, so yeah, if you're hanging out here with me, you can drop a like. But we're gonna go ahead and run through this. If you guys haven't used dividend.com, great website for picking up stocks that have ex dividends next week. So click on ex dividend dates here, and I'm looking to pick up normally common shares or REITs, and I go for next week. So between the 5th and the 9th of next week, and select search here. Now, Dividend.com recently made an update where they removed the DARS rating system from their availability here, so it's actually locked out and you can't see what they're rated as. But for the most part, I've never really used it as a metric of deciding whether the stock was worth investing in or not, but you can still sort by it. So if you click on here a couple times, you can click on it and you can see it puts in Son on top. And I know that right off the bat, a lot of these here names, Intel is a really good name to invest. Sunoco Products, I've invested in this one in the past. So while it doesn't show you what they're rated as, it allows you to sort by their rating system in the background. So even though the website doesn't show you what they're actually rated, we know that Intel, Matson, and a few other of these, Boeing, are highly rated companies, and we know that the DARs on these are actually higher than the ones below it as we're moving down the list. So normally I like to take up the first page here of stocks that are going ex dividend, and there's a bunch of them. Usually there's about 100 per page, and then I head over to my Excel spreadsheet here, and I paste that in. Now, one of the things here I have is just sort of the same information here, and all I'm going to be doing is giving them a rating system that I've kind of put in, or I just give it a number per the way that it's actually sorted in here. Yeah, Intel has got beat up recently due to their earnings actually came up pretty well, I thought. And Yeah, I'd agree. Could be a good time to buy. I don't own Intel right now, but they are a good stock, and I'm sure they'll probably end up on this list. So once I put them in there, I just kind of give them my own rating system from 1 to, let's see, we got 100 stocks in here on the list, and then I go over to yields, sort them by highest yield to lowest yield. And normally I like a good starting yield of around 1.5, so anything below 1.5, I just sort of knock it off the list automatically as a good starting point. Yeah, we all got stocks that I got beat up. Yeah, I have a bunch of stocks in my portfolio right now that are currently down. I think my biggest loser is either Caterpillar, or I think Caterpillar is my biggest loser, down like 30%. But today I actually came out green. Today I came up 0.11% because of a couple stocks. I have a variety of stocks within my portfolio, not just tech heavy. So yeah. I did see Amazon get hammered today. They were positive by 1% today, and then they just all of a sudden fell back 6%. So big drop there. So once I've sorted these from high to low in dividend yield, oh, yours is Amazon. Yeah, Amazon got hammered. I then resort them by the DARS rating system that we had initially gave them. So I just gave them a rating of 1 to whatever they were pointed in here. And that kind of gives us, we've already thinned it down. We went from 100 stocks in our list to now 73. And here, if depending on whatever account you're currently trading, if you're using like a Roth IRA, then a holding a REIT within a Roth IRA doesn't matter because you're not going to get taxed on it anyways. But if you're holding one of these stocks within a regular taxable account, you don't really want to be holding a REIT or one of these unqualified stocks within a taxable account because you're not taking advantage of that dividend anyways. It's going to get taxed at your regular income bracket. So here, I go ahead and leave these non-qualified ones. A lot of these are just mainly REITs. So once I have those here, I'm going to go ahead and stick them to the right here and drag my other one here. Now this is the part that usually takes the longest portion of my whole screening process. So I usually have to manually type every single one of these in. Let's see if I can go there. So if you guys have any questions, you guys can drop them in the chat. This is the process that I kind of go about every single week, kind of going through and the screening process of these stocks. I've done this in the past, but normally, yeah, if anybody wants to drop any questions, let's see, COLB. And this is sort of how I like to screen a bunch of stocks all at once. So I don't go out there and look, I have my own watch list, but I don't actively go out and research every single stock that's available, on the market. There's thousands upon thousands of stocks out there. So by doing this every single week, I kind of get an exposure to stocks that are going ex-dividend. And of these stocks, I often remove a bunch of them that are just not worthy of really taking a look at. So kind of go about this process here. AMTD, HTBK, FE. And a lot of these stocks here, as I'm kind of going down the list, I don't really recognize them. Some of them I've recognized, Intel and Sunoco. Well, let's see. That one's not popping up on my list here. HBNK. Oh, HTBK. FE. BHLB. So I may have my kid or my wife pop into the door. Hey, buddy.
What are you doing?
Recording. You want to come say hi?
No, but I wanted to go in my room and play.
We can play in a little bit. I got the kiddo in here now. Let's see, SSB. Hey, buddy, can you hang out with mommy for a little bit? Okay, thank you. Can you close the door, please? Thank you. So we're kind of making our way down the list. I may not end up going all the way. So what I'm going to be doing is a lot of these names here down towards the bottom are actually a lot of unknowns, unrecognizable ones. AEP Utility Company, that's one I kind of recognize. Tile. I'm going to make my way here down to 50. So at least during this process, we're going to be screening. Oh, there's Delta. 50 stocks. So this process takes a little bit of time here. So initially I head over to dividend.com. I go for X dividend stocks, going X dividend next week. I sort them by the DARS system that it doesn't really show me what they're rated as, but it doesn't really matter. I just kind of sort it. I pick the stocks on top. I usually gather the first 100, and then of those 100, I'll eliminate the stocks that have dividend yields under 1.5. That way, if you're investing $100, you'll start off with a dividend payout of $1.50 per or more with $100, and then I put them over here in the Y charts. And once we get roughly 50 to 100 stocks within this list, the next step here is to really go through each one of these stocks and look at their revenue, free cash flow, net income, and that's sort of my next elimination is seeing where have these stocks moved in. Have you checked out BGS? Not specifically. Is that one? I could add it in here. Just take a quick look at it. So BGS, for example, if we were looking at that one, I like to look at revenue, free cash flow, net income, and then look at it in percentage here. So for the most part, this company, high dividend. So high revenue up 24% per year, on average over year, 14% cash flow per year, and very high net income. So, when you're looking at the financials at a 10-year outlook, it looks very well. If you're looking at it here on the short-term frame, still their net income is looking very positive over the last 5 years. Revenue up positive over the last 5 years. And free cash flow looks like they maybe had an acquisition in early 2017, but I haven't really looked into B&G Foods. Interesting one there. So, starting at the top, normally if you're looking at stocks going ex dividend next week, here I'll go through, look at their 10-year and their 5-year. I want to make sure that all these stocks here have had performance here. Coca-Cola, CCE, Coca-Cola European Partners, ticker symbol CCE. It's been declining in revenue. You can see a decline of revenue back in 2009 going into 2010. And since 2010, it really hasn't recovered. You can see there has been a bit of a recovery here. After 2016, the company's revenue, net income, free cash flow has been climbing. But this could be a good buying opportunity depending on how their price has actually gone in the last few years. But you're not really getting it at a discount. So it just doesn't match up with what I like to see. It has been declining over the past 10 years. Revenue is still down. So I just kind of eliminate it. Right now we're going into earnings, and revenue is an important factor with a lot of stocks. If they're not keeping up with their revenue quarter after quarter, year after year, they're going to get trashed here in the earnings, because if they report bad earnings, they're only growing their revenue by 1 or 2%. They're not really keeping up with that rate of inflation. Plus, with higher interest rates, their debt is going to get more expensive to really hold. So any of these companies here that are showing any sort of negativity, I go ahead and just kind of toss them out. I don't really look at the stocks themselves. Initially, I'm going through and looking at just their financials. And this little process, that the most time-consuming process of this is, manually having to go through and see the stocks. And here, free cash flow down, net income down over the past 10 years. So Anaconda Mining, probably not a good one there. Here we can see everything there in the negative. Remove it off the list there. Free cash flow, negative free cash flow isn't a bad thing, but for the most part, there's already so many other companies here that are producing free cash flow. They're positive cash flow, revenue, and everything, so it's not really worth it not to eliminate them from the list. How you doing, Jorge? In South State Corp. Speedway Motors. So how was everyone's day in the market? Were you watching the market like a hawk, or were you more of a passive? You set some money into the market, you let it do its thing, and you kind of look at your stocks towards the end of the day and see whether you were up or down. AEP. I know a lot of people buy into AEP, utility company there. They've done transition there. Oops, and Allergen down in net income. And Delta Airlines. Okay, so we got a lot of stocks there that have made it through the 10-year kind of process there. So here now we're looking at the 5-year, down in free cash flow over the last 5 years. So this is just sort of like a little process. It could be a bit of a grindy process because this is what I kind of do. Every time I discuss stocks going ex-dividend next week, I always go through, I start off with a list of about 50 stocks. I go down, eliminate stocks with low yields. I eliminate stocks that have, declining financials, like their revenue, their free cash flow, their net income is not being positive. And this whole little process, it takes a little bit, but you end up with a pretty good list of stocks. First Constitution Bank Corp, negative free cash flow there. Washington Federal, Parker, and let's see here. We're kind of getting down to our next step here. So now we've kind of got a pretty good list of companies here that are all producing. They're all positive in the revenue. They're all positive in net income. They're all positive in free cash flow. And they're all positive as far as starting yields at 1.5 or higher. So we've knocked down our list. We can actually expand this out and zoom in here. So we've knocked down our list from 50 stocks now down to roughly 25 or 30 stocks in here. So now one of the next steps I like to do here is once we've looked at their revenue, free cash flow, and net income, I'll take a look at their PE ratio and estimated earnings for the current year and their next fiscal year here. So here I'll go back down to the regular data format. Well, yeah, if you haven't started a Roth IRA, I would say that the best time to start a Roth IRA is currently, at any time. If you don't have one, it's the best time to invest and start a Roth IRA because depending on what your age is, you only get to contribute $5,500 every single year. If you wait a year, if you waited 2 years, if you wait 3 years, if you waited 3 years to start your Roth IRA, that's $15,000 that you could have had working for you within a Roth IRA. Where at the end, at 59.5, you could have taken full advantage of those capital gains, those dividends, those contributions within that account tax-free. But if you wait a few years, you'll miss out on being able to deposit that $5,500. Like in my wife's Roth IRA portfolio that I put out a video this morning, I came out saying that we've contributed roughly $2,500 towards her Roth IRA. And we still had to put in roughly $3,000 into account. So I just took, $3,000 by 9 weeks remaining. That leaves us with, I need to deposit roughly $330 every single week going forward for the next 9 weeks in order to max out her Roth IRA. And then in 2019, depending on where the portfolio is sitting, where the stock market's sitting, I'll come up again with another plan. And either if we're really high in the portfolio, if it's gained by X amount, I may kind of lower my allotments every single week in order to wait for another drop in the market because we're going into a very volatile period. If the market, if it's trading near 52-week highs, we can go week where we're kind of trading high or near a high point, and then we'll dip down 10%. We'll dip down 15%, but then we'll bounce back up 10%. We'll dip another 5 or 10%, and we'll bounce up 15%. If you go back and look at 1992. It was up to the 2000 recession. We had a lot of periods in that area where we dipped down 10 or 15%, but we always bounced back up and came back up. And, over the long time, depending on how old you are, I'm 33, my wife's 28, we have a long time to go until we actually retire and can take advantage of our Roth account. So, unless you have less than 2 or 3 years left in the market, there's really no stopping you from your portfolio not recovering from any sort of downturn. So, yeah, if you want to take advantage of your Roth IRA, start now and keep investing until you retire. Just come up with a game plan. I'll be putting out an app here pretty soon this week as far as, knowing what your retirement number is. And a lot of times, if you're only investing to be able to withdraw $40,000 a year, you only need to invest a few $100 per week or per month in order to meet your goals. So Jorge said, do you have a video that shows your type of portfolio? What what's the types of dividend stocks or growth for IRA or both? I have a mixture. So I do have a lot of my monthly recap videos. I go over my complete portfolio, and I have a mixture of dividend growth stocks and dividend yield stocks. So dividend growth stock would be one that keeps up with the S&P 500, Johnson and Johnson, Smith and Wesson, Stanley Black and Decker, Apple. They all meet or exceed the returns of the S&P 500. Now AT&T is another one that's in the portfolio. That one doesn't. That one grows maybe an average of 1 or 2% per year, but it has a high starting yield of around 6 or 7%. So AT&T is less likely to lose 50% of its equity in a downturn, but if you were investing in, say, Microsoft could take a huge hit during a recession because it's a growth stock. It's a growth dividend stock. It has a low yield, but it has a high return and risk element where it may pull back much harder than something such as AT&T. It may only pull back slightly during a downturn because a lot of investors are more likely to keep their money invested in that stock knowing that that company is going to be paying out 7% yield regardless of the market going up or down. And AT&T is one of those companies that have continued to raise and grow and keep their dividend for the past 32 years. They've just grown and continue paying out that dividend, so they're less likely there to cut it. So continuing on here, I'm going to go ahead and through these stocks here, we're going to look at stocks that have raised their earnings per share. We're going to see here in the green, that's their future earnings per share for the next year. So they're currently at an 82. Their future is 95. So we want green on top. And PE here is 19.34. Forward PE with the new earnings per share is expected to decrease to 17.22. So we want to see green on top, orange on bottom. And we just kind of go down the list. We see orange or green is on bottom, meaning that this company is expected to decrease their earnings per share. Their earnings per share is still expected to grow. So if I see that their earnings are expected to decrease, their PE ratio is expected to decrease, meaning their earnings are, it's kind of a mixture there. I like to just remove it there. And I will answer here in just a second. So green on top, orange, kind of going through orange, green and orange, green and orange. Boeing here, for example, that one's going up. That one got hammered today. No, Lockheed Martin got hammered today. That one is in my portfolio. That one got hammered. So does AT&T debt scare you, especially with the Time Warner acquisition? My portfolio lost 18% mainly, so to me, being scared and selling bad. No, AT&T doesn't really scare me. AT&T is, it's a company. It's a communication company. It's been around a long time. It's one of those... It's almost like a utility. You can't really not have AT&T around. It's taken out a lot of debt, but at the same time, they have a lot to offer their customers. They have a lot of products and services. They have, their cell phones. They have, I don't know if they have any fiber or broadband, but they, mainly telecommunications company. And I don't really work with a lot of AT&T personnel. To me, it doesn't really scare me. They're one of those. They're basically like a monopoly almost, right? Because it's either Verizon or AT&T. Those are a lot of your providers. You can choose Sprint, you can choose T-Mobile, but for the most part, nobody really likes to use Sprint. Nobody likes to use T-Mobile, and I think those are merging anyways in the future. So I think AT&T and Verizon both have a special place in anyone's portfolio. If you're more of a growth investor, you may look at Verizon as a better growth with a lower yield. If you're more of a stabilized stock, AT&T hasn't really had a whole lot of stability lately. You can see that it has dropped, 18% recently during their earnings. But if you just keep averaging into it, I did decrease it in my portfolio. I decreased it for a while because I was averaging into it to a point where I felt comfortable where it was at. And it is down in my portfolio right now, but it still pays me out a dividend. It still pays out $2 per share. So eventually, those dividends that get paid out to me, it may not be buying me AT&T, but they're going to be buying me shares of another company. So until they stop or cut their dividend, AT&T can continue to hold in my portfolio because the equity there may change, but their dividend payout that they're paying me remains either the same or it's going to be growing in the future. And that's kind of why I bought them into my portfolio. They're mainly just a cash paying out. they pay out cash. They're just stable. They pay out cash. They're consistent. They're just one of those titans there as far as telecommunication goes. So here we have future forward PE ratio expected to increase here by quite a bit. And it's kind of weird there that their forward PE would be at 11.22, whereas current PE, I could spend time researching why, but for the most part, a lot of these companies, let's see, Orange, that's forward PE is cutting in half, and earnings per share jumping up. And that one, Berkshire Hills, orange and, yeah, that's what we want. Orange on the bottom, green on the top. Orange and green. Orange and green. Parker, orange and green. Great Western Bank Corp. Investor Bank Corp. Lots of financials here. Orange and, oh. So that one doesn't make the case there. Bassett. Orange and green. Employee holders. So if you guys have any questions, you guys can drop them into the comment section. I read them all and kind of go along in there. That one works. Okay, so now we've kind of gone through our list. We've picked up 50 stocks. We've decreased, we've cut out about 13, 23 stocks out for just having yields, starting yields under 1.5. Then we went through our list, and of those 37 stocks, we cut out stocks that had decreasing revenue, net income, or free cash flow over the last 10 years or 5 years, and we cut those stocks out. Now we went through all of these stocks. All of these stocks have forward PE ratios expecting to decrease, meaning that their earnings are expected to increase. We also saw that their earnings per share going into 2019 are expected to grow. So we want earnings per share to be growing. We want their PE ratios to be decreasing, showing that the company is expected to be more profitable than they are currently. So, those are some good financials to kind of check and make sure. Now, this portion here, as we kind of get to this style of a list, this is where I would bust out Dividend.com now. Actually, I have my other tab over here somewhere. Let's go ahead and get this one. Oh, Dividend. Dividend.com. Jeez. There we go. Okay, and sort of my next step here is to just open up these stocks here. I can actually go from here. So BFIN, WBS. I guess I should use my search, WBS. So here, all I'm going to be doing is going down my list, opening these companies here in another tab. And now that we kind of screen them for their financials, for their PE ratios, we've screened them for their earnings per share. We're going to be looking at the stocks, how long they've grown their dividend, what's their payout ratio, are they a reliable company? A lot of the times, these companies that I pick with stocks going ex-dividend next week, they end up having very low payout ratios, usually 60% or less. And a lot of times lately, like last week's stocks that we had ex-dividends going out, they've had all grown their dividend for the past 10 years or longer. I think Colgate was our longest paying one out in the 30-some years. So BHLB, that one. And GBNK. How was your day today, Jorge? Did you lose or did you win today? GBSSB. WAFD. PH. GBW. BSET. Okay, now this process, there's tile. Okay, now from here, these are the stocks that sort of made our list here. Now we have a bunch of stocks here we can kind of go through, and what I like to do is toss anything that's really hasn't grown their dividend for very long. I will throw it to the right. But there's not a lot of stocks here. I'm going to go ahead and move some stocks here that have grown their dividends for more than 5 years over here to the left. I'm going through the tabs really quick. And stocks that haven't grown their dividend for the longest to the right. And actually it looks like we got a lot of them. Okay, so 7 years, 7, 7, 5, and 3. So 1, 2, 3, 4, 5. Okay, so oh, here's another 7. Okay. Okay, so in this example, we had a bunch of stocks here that we actually ended up, but of these stocks, we actually ended up with only a few that have grown their dividends for more than 5 years, which is what I like to kind of report on. So the stocks that we have this week, in first place, we had Webster Financial, 7 years of dividend growth since 2011, starting yield of 2.25, low payout ratio of 36.2. We have HFWA, another bank, Pacific Bank, grown their dividend for another 7 years, payout ratio of 38%. We had ticker symbol MSM, this is Industrial Equipment Wholesale, grown their dividend for the past 7 years, payout ratio of 49.7. We have ticker symbol COLB, Savings and Loans, grown their dividend for 7 years as well, payout ratio of 41.6. And we had Bassett Furniture Industries, ticker symbol BSET, grown their dividend for the past 5 years. Now, all these other stocks here, they've only grown their dividend for either 4 years or 3 years or had no dividend growth at all. So, of these stocks here that we kind of covered, okay, can you let mommy know? Okay, guys, well, so our stock list we're going to be covering, and on, when I write my article up, we're going to be going over ticker symbol WBS, ticker symbol HFWA, ticker symbol MSM, ticker symbol COLB, and ticker symbol BSET. So that is it for today's video. I have to go help my kiddo. And if you guys have any questions, let me know in the comment section below. But otherwise, I will see you guys next time. Have a great day. Bye-bye.